Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about MIDDLESEX Water Co. quarterly report. Middlesex Water Company provides a range of businesses and services, including regulated water utility services plus collecting, treating, and distributing water to residential, commercial, industrial, and fire protection customers plus providing wholesale water services, regulated wastewater system, services plus treating and managing wastewater, in New Jersey non-regulated contract services, plus operating and maintaining municipal and private water systems, plus operating and maintaining municipal and private wastewater systems. Middlesex Water Co.'s stock price has dropped by -8.36% over the past year due to several factors. The company's third-quarter earnings per share fell short of analyst estimates, missing expectations by $0.09 to $0.10 per share. Additionally, revenue declined to $54.1 million, below estimated $56.08 million. Unfavorable weather conditions contributed to lower water consumption and increased operational costs. Furthermore, the company's underperformance in the market has led to a reevaluation of its valuation, resulting in a decline in stock price. The primary drivers of revenue growth or decline can be summarized into several key factors. Revenue growth is primarily driven by an increase in rates at Southern Shores, recovery of costs associated with lead service lines, and net proceeds from common stock sales. Additionally, organic residential customer growth in the Tidewater system, as well as base rate increases and increased distribution system improvement charge, DSIC, and lead service line, LSL recovery rates, have contributed to revenue growth. On the other hand, revenue decline is attributed to a decrease in regulated revenues, lower customer consumption driven by unfavorable weather in the Middlesex system, and a decrease of $1 million in operating revenues for the 3 months ended September 30, 2025 compared to the same period in 2024. Overall, the company's revenue growth is largely driven by rate increases, cost recovery, and organic customer growth, while revenue decline is primarily due to lower regulated revenues and unfavorable weather conditions. Net income and profit margins. A shift in trends. The financial summary reveals a decline in net income and profit margins for the company. In Q3 2025, net income decreased by $361,000, 2.5%, to $13,958 million compared to $14,319 million in Q3 2024. This trend continued throughout the year, with YTD 2025 net income decreasing by $3.33 million. Profit margins also experienced a decline, with operating income margin dropping from 29.1% in Q3 2024 to 32.6% in Q3 2025. The consolidated operating margin decreased from 29.4% in 2024 to 29.3% in 2025. Net income margins also declined, falling from 13.5% in 2024 to 13.3% in 2025. The reasoning behind this change lies in the increase in operations and maintenance expense, depreciation expense, and a decrease in other income. However, there was an increase in operating revenues due to base rate increases and customer growth, which partially offset these losses. The decrease in income taxes also contributed to the decline in net income. Overall, while some factors improved, the negative impacts outweighed the positive ones, resulting in a decline in net income and profit margins. The company is indeed generating positive operating cash flow, as evident from the financial summary on page 3, which states that net cash provided by operating activities for 2025 was $44,134. This is a direct indicator of the company's ability to generate sufficient cash from its core operations. Additionally, page 26 highlights the key drivers behind this positive operating cash flow, including an increase in operating revenues and a decrease in various expenses. These factors collectively contribute to the company's strong financial performance. The company's debt level has experienced a slight decrease over the past period. Long-term debt has been reduced by approximately $4 million, $2,671 plus $1.67 million, since page 2 and page 5, respectively. Additionally, the current portion of long-term debt decreased by $66 on page 2. Interest expenses have also seen a decline, with a reduction of $186 on both page 1 and page 15 for the 9 months ended September 30, 2025. Overall, these changes indicate a minor decrease in debt level and interest expenses. Management's outlook on company strategy. The company, Middlesex, anticipates a positive short-term outlook with additional settlement payments from the PFAS multi-district litigation settlement in 2025. In the long term, the strategy focuses on selective and sustainable growth through investments in utility infrastructure, cost recovery, strategic acquisitions, and contract-based operations. To achieve this growth, the company may issue additional shares of common stock to fund its investment program and maintain a balanced capital structure. However, Middlesex is exposed to market risks associated with interest rates and commodity prices, which it manages through established policies. The company is also seeking approval for a rate increase request of $24.9 million, or 19.3%, to cover investments in water and wastewater quality and environmental regulations. The company has demonstrated a commitment to returning value to its shareholders through both dividend payments and share buybacks. In terms of dividends, the company paid out $23,297,000 in common stock dividends and $99,000 in preferred stock dividends. Additionally, the company repurchased 17,000 shares, indicating that it is also focused on reducing its outstanding share count and increasing earnings per share. Concerns about supply chain disruption and inventory buildup. There are growing concerns regarding the potential for supply chain disruptions and inventory buildup. Tidewater's financial summary highlights several key points that suggest a possible issue with their supply chain. Firstly, estimated future capital expenditures of $18.9 million are dependent on resolving supply chain issues. This indicates that the company is anticipating difficulties in maintaining a stable supply chain. Furthermore, the company has drawn down $1.7 million as of September 30, 2025, and expects requisitions to continue through the fourth quarter of 2025. This suggests that Tidewater is experiencing cash flow pressures due to supply chain disruptions. Additionally, inventory levels have increased from $6,719 in 2024 to $7,309 in 2025, which may indicate some level of inventory buildup or supply chain disruption. These factors collectively raise concerns about the potential for supply chain disruptions and inventory buildup, which could impact Tidewater's operations and financial performance. That concludes the financial summary for MIDDLESEX Water Co. Feel free to comment below, and I will be happy to answer them when possible.